Hey everyone, one of the most anticipated event of the year, that is Budget 2025, has been declared and has been a very good budget, especially for middle class people. In the last few years, government was more focused towards capex side by investing in infrastructure of the country. This public spending went up from 3 lakh crore in FY19 to 11.1 lakh crore by FY25, with special focus on roads and railways, and that resulted in excellent growth in the economy. However, one of the side effects was slowdown in consumption due to high inflation rate in the country and multiple levels of taxation. And the government also understands that the economy can't prosper just by spending on infrastructure. You need people to spend money because consumption is one of the key growth driver of the economy. And the fact that when people buy products and services, it results in capex from private companies as well. That's where in Budget 2025, government kept the infrastructure budget almost flat versus last year at around 11.2 lakh crore, and the biggest highlight of the budget 2025 is clearly no income tax up to rupees 12 lakh of income in the new tax slab. Earlier this number was 7 lakh rupee, so rupees 5 lakh jump is very commendable. It means straight away saving of up to rupees 80,000 for people with salary in the range of 7 to 12 lakh. Of course, the exact saving amount would depend upon your income. Plus, if you are a salaried employee, add additional 75,000 as standard deduction. So no tax up to rupees 12.75 lakh a year. Honestly, after a long time, I felt that this budget has focused on middle class people of India. Here, please note that if your income is more than 12 lakh, you have to pay tax as per the new tax slab. But the new tax slab is also better than the previous one, and it would help save up to 1.1 lakh rupees subject to your taxable income. Maybe I can do a separate video on this topic. Essentially, the point is this tax cut is almost worth rupees 1 lakh crore, or in other words, government has given rupees 1 lakh crore in the hands of taxpayers. Now, this would have a multiplier effect on the economy, because if you have more money to spend, you would end up spending the money on eating out, travel, buying gadgets, consumer durables, and so on. This would directly benefit the entire value chain, including the business owner, distributor, company, and its supplier. This would further result in the next round of spending from the business owner, distributors, companies, etc. So more spending would result in more income for business, and that would result in further business expansion and more employment. And that would result in further growth in the economy. So one theme that would be a direct beneficiary of tax cut is consumption. But consumption is a big theme, and there are many sectors that fall within this segment. So in today's video, I'd like to highlight some of the sectors within the consumption theme that would be a beneficiary of tax rate cuts and key stocks to benefit from it. But before we proceed, please make sure that you do your research before investing your money and do not buy any stock on tips. The idea behind this video is to share my viewpoint and identify potential business. But you further need to deep dive before investing your money. Alright, let's get started. Friends, while Budget 2025 would certainly drive economic growth, one thing that remains in our hand is our own financial growth and career growth. Because let's be honest, no policy can protect you if you don't have the right skills. The real shift is not just happening in tax brackets or subsidies. It's happening in the job market, where AI and automation are quietly taking over. I always say that this AI revolution is similar to personal computers in the 90s. Those who could not adapt to PCs ended up losing their job. But those who adapted early witnessed amazing career growth. The best part is, today there are many AI tools that are making our life very easy and immensely contributing in improving the efficiency. I personally use various AI tools in my research related to finance and investment, and I find it incredibly helpful. That's why I highly recommend this 3-hour hands-on AI training by Growth School, which is our partner in today's video. It is usually a paid training, but for my first 1,000 audience, it's completely free. Link is in the description. In this, you will learn how to use AI to automate work, increase productivity, and save hours daily. Then job hunting, salary hike strategies to stay ahead of market shift, and master more than 20 AI tools for data analysis, business growth, and personal branding. This training is for everyone. If you are self-employed, salaried professional from tech or non-tech background like sales, marketing, operation, or finance. Link is in the description and pinned comment. Moving on, the first sector to benefit within the consumption theme is FMCG sector. If you look at last 40 years of history of Indian stock market, FMCG is one sector that has created massive wealth for the investors. Simply because there's a clear shift in trend from unbranded food products to branded food products. So companies that created big brands like Nestle with its portfolio of Maggi, Kit Kat, Cerelac, Nescafe, then HUL with a huge list of brands like Surf Excel, Dove, Brook Bonti, Vim, Kisan Ketchup and so on ended up creating massive wealth for the investors. Also the fact that FMCG companies are cash generating machines. They have a very high CFO to EBITDA conversion and very high profitability, that is ROE and ROCE, with almost zero debt. Going forward, the key trend like rising income level, then growing trend of urbanization where people are moving from rural part to urban cities of India, coupled with premiumization trend where people are willing to pay a premium price for high quality products would continue to drive the growth of FMCG sector in India. But there is only one problem today. Majority of FMCG companies are large caps and their growth is on the lower side. And as compared to their earning growth, their valuations are relatively higher. For instance, HUL earnings have compounded at only 11% rate in last 10 years, but its median P is in the range of 60. Although today the P has now fallen below the median to levels of around 55. But since the earning growth is on the lower side, the valuation comfort is still less. So from here, HUL may continue to compound at 10-15% rate, but it won't be a high growth stock. Having said this, I like ITC in this space because its P ratio is still below 30 with current price of around 450. Once a cigarette focused company, ITC has successfully reinvented itself to an FMCG driven giant with brands like Ashirwad, Sunfeast, Bingo, Yippee and Classmate, and today it is directly competing with HUL, Nestle and Tata Consumer. Also the fact that ITC has a very strong distribution network with strong penetration in the rural part of the country. Here, please note that ITC won't command a very high PE like your HUL, Nestle, Tata Consumer because even today, around 75% of company's profit comes from cigarette business. So it is going to be a long journey for ITC to transform into a FMCG major, but that's where the company is focused on. Hence, there is scope for re-rating if ITC continues to grow its FMCG business at a faster rate. Also, its hotel business has been demerged now. So there is good scope for value unlocking. And the fact that today ITC has a dividend yield of nearly 3%. So it's also a good dividend player. Then another company I like in FMCG space, which is from small cap segment, is Mrs. Bector Food. I remember covering it in detail long back at much lower level. Mrs. Bector has established a strong brand presence in the northern Indian market in categories like biscuit segment with brand Cremica and bakery segment with brand English Oven. It also has export business with range of crackers, cookies and creams along with tie-up with big QSR chains like McD, Burger King, Domino's, Subway, KFC and so on. Company has been growing at an excellent rate with 16% CAGR growth in revenue in 5 years and 33% CAGR rate in net profit growth in 5 years. Although the growth has reduced in last 3 years and trailing 12 months due to slowdown in consumption and high inflation. Company enjoys excellent profitability and negligible debt along with very good cash conversion rate. Although there is a risk of high competition as food industry in India is highly competitive and also fluctuation in raw material prices can impact company's profitability. But Mrs. Bector management expect the company to grow in mid-teens to high teens driven by expanding its manufacturing lines across bakery and business segment, increase in distribution network with focus on expanding in West and South India to become a pan-India player. And company is also expanding its product offerings. In recent correction, Mrs. Bector has fallen more than 30% and its PE ratio is now around 65, which is decent for a small cap FMCG company having a market cap of around 9,000 crore and growing at a good rate. The next sector to benefit from consumption trend is retail. Now retail include different type of companies. For instance, within grocery you have Avenue Supermart, the parent company of D-Mart. At one point in time, D-Mart was growing at a very fast rate and its share price also zoomed a lot. However, the growth rate has slowed down now from 28% revenue CAGR in 3 years to 18% in trailing 12 months and 32% CAGR growth in net profit in 3 years to now at 12%. So there are two key challenges companies facing. First is slowdown in growth due to inflation and second is risk of competition from new age quick commerce companies. Since it's always commanded a premium valuation, there has been a sharp correction and stock price is still down around 28% from the peak. Although I believe that Indian market is large enough to have both D-Mart kind of model and quick commerce to grow together. However, it looks like quick commerce can potentially slow down the anticipated growth of DMart, and that is one key risk. So earlier, DMart commanded a higher valuation on the assumption of higher growth rate. But now there's a risk of slowdown in growth as compared to the previous growth, and hence valuation has derated. Then there are gold retail companies that are also growing at a very good rate due to more and more people moving from unorganized players towards organized retail players. The key reasons include your trust and quality assurance, where organized players provide BIS hallmark certified gold. This transparency in quality and price build consumer trust. Second factor is organized gold retailers offer a much wider range of design as per consumer preference. Third, organized players run various promotion campaigns like gold saving plan, option to buy on EMI and so on. Fourth, organized players provide much better consumer experience in terms of well-designed showroom, exchange policy, loyalty program and so on. Apart from this, one factor that has boosted the growth of organized players is government regulations like GST that has removed the price gap advantage that unorganized player earlier had over the organized player. On top of this, organized players are opening up their retail stores at a fast rate to capture the market in tier 2 and 3 cities of India. There are many companies in this space including Titan, Kalyan Jeweler, Senco Gold and recently listed P. N. Gadgil. And there's a good correction in gold retail companies as well. My preference in this segment is Senco and P. N. Gadgil. Both companies command similar market cap and both stocks have corrected more than 30% recently. In terms of growth, P. N. Gadgil has shown much faster growth rate as compared to Senco Gold, also has got better profitability and inventory turnover. But valuation wise, Senco is at P of around 3940 and P. N. Gadgil P is around 50. So the better performance of P. N. Gadgil is offset by nearly 30-35% premium valuation as compared to Senco Gold. I like both the companies. The next segment within retail is value fashion that include players like Trent, V2 Retail, Style Bazaar, etc. I've recently done a detailed video on this value fashion segment, worth watching. Next segment within the consumption theme is consumer durable. That include your AC, fridge, washing machine, fan, lights, kitchen appliances. I think that tax saving should have a positive impact on discretionary spending and consumer durable should be a beneficiary of this trend. I like three companies in this segment: Voltas, Whirlpool and Havells. All these companies have struggled in the last few years due to slowdown in demand. But the long-term story of these three companies looks very bright. And this correction can be an opportunity to consider them for the long term. The next sector to benefit from increase in consumption trend is auto sector, especially companies that are focused on rural market. That's where within two-wheeler, I like Hero Moto, Bajaj Auto and TVS Motor. Honestly, it's very difficult to pick just one company among these three. I think all three of them would continue to do well. So you can pick any one as per your preference. In four-wheeler segment, my first preferred pick is Mahindra & Mahindra. It's very well positioned to benefit from premiumization trend in Indian auto sector with leadership in SUV segment. Its SUVs like Thar, XUV700, Scorpio are ruling the Indian market. Also recently it has launched EV cars that are already gaining a lot of interest. Going forward, Mahindra & Mahindra would continue to grow due to rising demand for SUVs as well as robust growth in its tractor business. Valuation wise, although valuations are slightly high at P of 33, but considering the growth, it will command a premium. Interestingly, while there is a good correction in Indian market, Mahindra & Mahindra is still trading near an all-time high. That shows the strength in its share. Now also, Tata Motors has fallen more than 40% below levels of 700. While nobody can predict the bottom, this correction looks good to systematically accumulate Tata Motors for long term. The next sector that would be a direct beneficiary of consumption trend is travel and tourism. It mainly includes the hotel and aviation sector. So within aviation, you have Indigo, that is Interglobe Aviation, that commands more than 60% market in Indian aviation sector. While short term could be volatile for Indigo due to issues like crude oil movement, but long term it should continue to do well. Within hotel, Indian Hotel, which is parent company of Taj Hotel, is well positioned to benefit from growing demand for travel and tourism. Lemon Tree is also good. Then I like Sammy Hotel in this space, but it is in business travel segment and not in leisure travel. Next beneficiary would be the new age companies that cater to quick commerce sector. It include your Zomato and Swiggy. In my opinion, both should do well in the near to medium term on account of high growth in quick commerce business. Although the valuation of Zomato and Swiggy is always debatable. In my opinion, as long as both companies continue to post high growth, market would continue to reward them. But the risk would be slowdown in growth. Maybe I can do a detailed video on latest position of Zomato and Swiggy. Then next segment in the list is Alco beverage sector. While there is certainly a slowdown in consumption demand, the alcohol sector continues to witness decent demand, which is clearly visible from the quarterly results. In this segment, my most preferred pick is Radico Khaitan and then United Spirit. Although valuation wise the comfort is on the lower side in both companies, but they should continue to do well and reward shareholders. So in this video we discuss the budget 2025 where government is focused on reviving the consumption demand in the economy. That's where the budget was focused towards the middle class with zero income tax till 12 lakh of income. This would result in incremental 1 lakh crore of additional saving and should create a multiplier effect in the economy with increased demand for consumption sector. That's where we discussed various sectors within this theme that include FMCG, retail, consumer durable, auto, travel and tourism, quick commerce and alcohol beverage sector. You can pick 7-8 stocks across the spectrum of consumption theme to build a diversified portfolio. Now tell me in the comment which stock from the consumption theme are part of your portfolio. If you find this video useful, share it within your circle. I'll see you next video. Till then, take care.